This is Shireesha from Master of Business Administration, Institute of Aeronautical Engineering. So in this session, I'm going to discuss about single entry system and double entry system in accountancy. So here accounting system is classified into two parts, that is single entry system and the double entry system. So in olden days, we used to see only single entry system in very olden days, where only cash book, only subsidiary books, only purchase and sales book used to be maintained. And in this single entry system, here we used to have a transaction where we have only one aspect in the accounting system. Here, due to this single entry system, we are not able to find out what is the exact profit or loss or the financial status of the business. So that's the reason in the modern era, we have got this double entry system. So double entry system tells us that here we are going to have the balanced accounts, as well as we are going to have twofold effect for each and every transaction, whatever we are going to put it in the accountancy. So in this double entry system, with this double entry system, we are going to have the complete picture of the financial status of the business. So let's move on with the single entry system first of all. So what is the single entry system? As I told just, we are going to do with only very nominal, very simple type of accounting system was there in olden days. That was the single entry system. And in this, we have got three types of single entry systems. So let us discuss one by one. So the very first one is, it is pure single entry system. So in this pure single entry system, we used to record personal account items. So you here, what are the personal account items? Personal account items are like, for example, Ram has purchased some goods from so-and-so company, let us say X company. So when Ram has purchased goods, so we are going to maintain some accounts of the Ram. So in this single entry system, we do also follow nowadays in very small petty kirana shops. So here they maintain certain accounts of their customers, right? For example, X is a small kirana shop. X kirana shop is going to sell goods to Ram, to Surya, to Raj. Okay. So to Ram, Surya and Raj, X, that is a small petty kirana shop, is selling goods to Ram, Surya and Raj, right? When this this X is selling goods to Ram, Surya and Raj, he is not considering all the transactions as cash transactions. So what is cash transaction and what is credit transaction? Let us discuss now. So coming to cash transaction is, if Ram is buying goods from X, so he's paying cash immediately for whatever transaction he has made. Ram is buying goods from X. X is selling goods to Ram. Okay. So in this transaction, he is paying cash immediately. Let us take 10 rupees. And coming to Surya is also purchasing goods from X, and Surya has promised that he is going to pay money on later on date. After 2 days, he is going to pay the amount for the worth of goods he has bought from X kirana shop. So he must pay, let us say, 20 rupees to X. This is credit transaction. This is credit transaction. This is cash transaction. Here, this Ram has paid cash immediately to X when he bought the goods of rupees 10. And Surya, what he is telling is, Surya has not paid amount to X immediately, and he is telling that he is going to pay after 2 days. So this 20 rupees is pending from Surya to X. So what X has to do now? He has to record something, because he cannot memorize all such transactions what are all happening in that particular day. He maybe X is going to deal with the number of people on a particular day. He may not remember all the transactions whatever he has made. So that's the reason what this X is doing. He is putting a particular page, Surya account. He opens an particular page, and so worth of goods, 20 rupees is pending from Surya. Okay, that is what he is going to write. And he'll open another account. Let us take Raj is also buying goods, and he has to pay 30 rupees, and he also did not pay at the same time. So it is considered as credit transaction, right? So Raj and Surya both are making a credit transaction, and Ram has made a cash transaction. Cash transaction means he is paying immediately. Okay, so these two are the credit transactions. So these two credit transactions, what is happening is he did not pay. These people haven't paid at the same time. What he is doing, what these people are doing, they are going to pay on the later on date. So again, he opens Raj account, and he writes so and so worth of goods, 30 rupees on so and so date, amount is pending. So this is a common practice done by any small kirana shops, right? So how much of amount is pending from on one day, on 1st Jan 2020, 1st Jan 2020, this Surya has bought. Again on 2nd Jan 2020, on 2nd Jan 2020, again this Surya is buying worth of 1000 rupees goods from X. So again in the same page he is going to write that this is also a credit transaction, and 1000 rupees is pending from Surya to X. That is what X is going to maintain, right? So at the end, he'll be knowing at the end of the month what is the amount of money which he need to receive from this sales from this particular person. That is Surya or Raj or some X, Y, Z or ABC, whatever it may be. So that's the reason here they used to maintain, like in olden days, they used to maintain like this, but now also very small petty kirana shops or petty dabba wala, pan wala, like chai wala, all these people maintain this single entry system only even today. They pani puri wala, all these people. Okay, we can say that all the unorganized sector can be considered as they are going to deal with only single entry system. Because when why they are not following double entry system? Because they will have lack of knowledge about the accountancy. That's the basic reason, and we require some expertise in making or in doing the accounting system. So any person and every person cannot do that until unless he is trained, or until unless he has some knowledge about the accounting system. So that's the reason even today, like all the unorganized sector businesses are going or running with a single entry system only. So coming to the first type of single entry system, that is pure single entry system, where we are dealing with only persons. Okay. So that is Ram account, Surya account, Raj account. These are all people, right? So all these are personal account items. So in pure single entry system, only person's name is going to be considered. Okay. And now moving on with the next one, that is simple single entry. That is simple single entry. So in this, we are going to deal with cash book. So what is this cash book? So first of all, pure single entry system. That is, we are dealing with Ram account, Raj account, Sham account, Surya account, or some person's account. And coming to simple single entry system, we can consider cash book with a personal book. So here we are going to maintain certain personal accounts in our books of accounts, as well as we are going to maintain the cash. So for example, what is the cash balance, cash balance available in our money box in the business? When we get up, for example, if we are owning a kirana shop, for example, so what will I check? I'll first of all check when I enter into my, when I open my small kirana shop in the morning at 7 o'clock. What will I do? I'll just pull the track and open my box, money box. I'll just count how much of money is there today. What is the beginning initial amount which I have in my cash box? That is what I'm going to calculate. Let us take, I have 1,000 rupees. I have 1,000 rupees. Okay. And by evening, when I close down my shop, what is the cash balance I have? So I'm going to make some records. I'm going to maintain some records about the cash. So in the earlier example, what I told, just Ram is going to buy some worth of goods, rupees 10. Ram has paid immediately cash, right? That is 10 rupees he has paid to X. So Ram has paid rupees 10 to X. Okay, this was the example, right? So here, this 10 rupees will go into cash account. Will go into cash account now. Okay. And some Shyam also purchased some goods, rupees 50, and he is also paying cash. So 50 plus 10 plus earlier 1,000 was there, and 10 rupees. So at the end of the day, how much of amount of cash is available in our cash box? 1,060. Okay, we are going to close down the balance that in today our sales is only 60 rupees. Okay, so that also we are going to maintain in the simple single entry system. Okay, and now moving on with the next type of accounting system, that is quasi single entry system. So coming to quasi single entry system, here we maintain subsidiary books. Subsidiary books means what are the purchases, what are the sales, purchases account, sales account, purchase returns account, and sales returns account. Okay, so these are the subsidiary books. So here we maintain all these in quasi single entry system. So what are these purchase account, sales account, purchase returns account? Sorry, this is sales returns account. Sales returns account. Okay, so what are the total sales we have made? What are the total purchases we have made? What are the total sales we have made? What are the purchase returns we got? What are the sales returns we are making? Will also to be recorded. Okay, so coming to this purchase account, here earlier in the first pure single entry system, we are going to just maintain the person's account from whom we have to receive money. Those records we are going to maintain. In simple single entry system, we are going to consider personal accounts as well as cash account. And coming to quasi single entry system, here we maintain subsidiary books. Subsidiary books means here we may purchase. How do we get items in our particular shop? Once we buy the provisions, we buy the goods from our wholesaler. Okay. If we are having a retail outlet, we buy goods from a wholesale outlet, right? From wholesaler, we are buying goods and with some margin, we are selling goods. Okay. So here, we buy so many goods, right? So we buy so many goods. So what are all the purchases we have made has to be recorded under purchases account. And coming to this purchase returns. So here we are going to purchase so many goods and we may feel that some items are defective. We found that some items are defective. So once they are damaged and defective, we are not going to sell these items to our customer because our credentials are also very important, right? So that's the reason we are going to return that those goods which we have purchased. Okay. So those goods we are going to return back to our supplier or to our wholesaler. Okay. So that's the reason here purchase returns has to be maintained. How many purchases we have made and how many purchase returns we have made, so that we'll get to know what are the net purchases in the organization for a particular time duration. Okay. Just like that, we are also going to do with the sales account. So we have purchased, obviously we have to sell goods, right? So we have to sell to so many people. So how many sales we have made? Okay. So earlier we have seen in the pure single entry system, we are maintaining personal account items, right? Personal account items, that is to whom we have paid, we have sold the goods, right? So here sales account is here completely what are the sales we have made and what are the sales returns we have received. So just like our purchase returns, sometimes the goods may be damaged and unknowingly we have sold the goods, and that customer returns those items. Okay. So in that case also we are going to take back those goods, that is sales returns. That is sales return. So that here sales minus sales returns, we get the net sales, so that we are going to arrive at the net sales, how much of sales we have made during a particular time of duration. So that kind of account is also maintained in a single entry system. And here there is no debit, there is no credit. Here we are just here we don't bother about what is the profit, what is the loss, what is the financial condition of the business. Only these items, these accounts, simple accounts are maintained in the single entry system. And depending upon the business type of the business, they choose pure single entry system, or they choose simple single entry system, or they choose quasi single entry system. So this is all about single entry system. And now we move on with the double entry system. And coming to double entry system, we have to memorize what is the dual aspect concept for double entry system. Why we have to memorize this double entry or the dual aspect concept? Because here double entry system itself says that we are going to have twofold effect in the accountancy system. This is a perfect accountancy system. We require lot of knowledge in this to do this double entry system, and all our accountancy is based on double entry system only. And coming to the dual aspect concept, for example, we have a computer. Okay, we have a computer. So we have money. So we have two things here. We have computer, we have money. So here we are going to sell the computer for the worth of so and so money. Okay. So we are going to sell this computer for this worth of money. So here we are giving what? We are giving computer for the worth of money, and we are receiving money for the worth of this computer. Okay. So here what is the exact transaction? Computer sold computer for sold computer for cash rupees 40,000. This is the transaction. So here we have sold this computer for how much? 40,000 rupees. So what is the worth of amount? 40,000 we are going to receive, right? 40,000 we are going to receive, and what we are giving? We are giving this computer to some person. Okay. So in this transaction, we will have two effects. That is, one receiving aspect and the other one giving aspect. So for every transaction, we will have twofold effect. Okay. As I discussed in the previous session, dual aspect concept. For every transaction, we will have dual aspect concept. That is, receiving aspect is called debit. Receiving aspect is debit, and giving aspect is credit. Okay. So now here what has to be debited? Here we have to debit something. We got some idea. We have to debit something, and we have to credit something, right? So this is about the dual entry system. Why this dual entry system is important, and why this dual entry system is in practice till today, and it will be there forever, because this gives the complete picture, financial picture of that particular business, and it also cautions us if we are incurring losses, and it gives what is the profit for that particular company for a particular duration. So that one gets motivated and improves his business, and he can compare with the his competitors, and apply few more strategies, and go on with the better solutions for his business to earn more money. So that is the reason this dual entry system is in practice till today, and it will be there for further forever. And here, as I told, in this double entry system, in this example, we have sold a computer to some person for the worth of 40,000. So once we read this transaction as a sentence, so for example, on 1st October 2021, on 1st October, sold computer for cash. For example, we have a computer center, and we sell computers. We have a shop. Okay. So here, what are the two aspects we can see in this transaction? We shall identify now. So first of all, we have to identify these items: computer, cash. Why we are identifying this computer and cash? Because we are giving computer and getting cash. So these are the two important items. And computer is going, computer we are selling, that is computer is going, that is giving aspect, so we have to credit. And cash we are receiving, so this is a receiving aspect, means debit. So likewise, we have to identify the important items, what we are selling, what we are getting, what we are purchasing, what we are giving. All these we have to identify, and based on that, we have to identify what is debit and what is credit. So in the double entry system means we have to remember that we are going to maintain two uh, aspects, that is one debit and the other one is credit. We will have twofold effect, that is debit and credit. For every transaction we are going to maintain, we are going to narrate, or we are going to journalize the transaction with debit and credit for every sentence, for every transaction. We do not call it as a sentence, we call it as a transaction in accounting terminology. And to move on with, we have certain classification of accounts and how to make or how to differentiate debit and how to differentiate credit. We have certain classification of accounts. Those are, first one is like a personal account and a nominal account and real account. These are the three basic classifications of accounts that are rules of accountancy. We can just read them as rule of accountancy. So personal account, here we maintain personal account, we maintain nominal account items, and we maintain real account items. So all the transactions, whatever we receive in the business, we are going to segregate or classify them into only these three type of categories, that is personal account, nominal account and real account items. So let us understand what are these personal account, nominal account and real account items further. So coming to the first one, that is personal account item, which have three categories again in the personal account. That is the very first one, that is natural personal account. What is this natural personal account? Here for names of the people, just names of the people are just examples of this personal account items. So for example, I have bought or purchased fan from Bajaj, rupees 10,000. This is what has happened. I have purchased fan from Bajaj company, rupees 10,000. So here, what is the name? So, or else we can, this is a company, I'll consider it as Bajaj person. His name is Bajaj. Okay. Or we can also take it as Raju. We shall take it as Raju. Purchased fan from Raju, rupees 10,000 is the transaction. So here Raju is a natural personal account item. Okay, so we can see some examples: David, Ram, Sham, all these are natural personal account items for us. We have to remember this for further journalizing the transactions, for doing the accounting system, how to debit and how to credit and all. Okay, so these are the basic rules one has to remember to journalize the transaction and to pass the journal entries and ledger accounts, and finally trial balance and final accounts too. So here purchased fan from Raju, rupees 10,000. So Raju is a natural personal account item. Or David, Ram, Sham, simple person name is a natural personal account item. And now going on with the second type of personal account item, that is artificial personal account. So what are the artificial personal account? For example, now with the same example, instead of Raju, what will I do? I'll write it as I have purchased from Bajaj company. I'll write it as Bajaj company. Okay. So here you can see Bajaj company. This is a company or some organization. From them we have purchased fan. So it is a artificial name. Who is naming that Bajaj company? We have named it. We have person. Our names. A human being name is considered as natural personal account item, and human being is going to do what? He's going to establish some business and he gives names to that business. That is, he's going to name some business, that is Bajaj company or ABC Limited or General Trading or Reliance Industries. All these are company names. So all these are artificial personal account items. These are all artificial personal account items. We are naming because we have established those business and we are giving certain name. We are registering the company name, and that is the artificial personal account item. So here in this transaction we have identified Bajaj company, right? And now let's move on with the next type of account, that is a representative personal account item. So in this representative personal account item can be like, for example, in one of the in any of the organization, we hire so many people, like few employees. So we don't run alone, right? So we have some employees, we have some labor. So we are not going to maintain a salary account of all the employees, like under we are not going to write, for example, X is one person, Y is another person, Z is another person, A is another person, B, C. So for X we have to pay 10k, and Y we have to pay 11k, and Z we have to pay 10k, and A 10k. For example, like this we have to pay to all these people. These are all employees. So all these employees, we are not going to write, we have to, in our accounting system, we are not going to write, I have to give salary to X 10,000. This cannot be transacted. This cannot be written in books of account. Instead, all these together bundled and make it as a salary payable account. We'll make it as a salary payable account. In this, what is the amount we have to pay? For example, 1 lakh is the total amount. 1 lakh is the total amount we have to pay. So, this 1 lakh we have to pay as a salary payable account. This is how the salary payable account 1 lakh, that is what we are going to transact. And coming to rent payable account. So we may be hiring so many things, like we may hire land, we may hire building at different places to conduct our business. So for that also, when I have hired so many places, I have to pay rent for that owner, right? So I'm not going to write Lagdi Kapul rent is 1 lakh and Gachibowli 2 lakhs. I'm not writing all these accounts individually. So what I'll do, total 5 lakhs is the rent payable. So I'll put it in the rent payable account. Only one simple transaction. So I'm going to represent this sales payable account is representing X, Y, Z, A, B, C. And rent payable is representing Gachibowli land or Lakdi Kapul land or Secunderabad land or building, whatever it may be. So all these are going to come under rent payable account. And insurance prepaid account. How many insurances we have for the business? Like for furniture, I have one kind of insurance. For machinery I have, for fire theft I have. So all these are coming under insurance prepaid account. So these are all representative personal account items. So all these are representative personal account items. So in personal account, we have three types, that is natural personal account, artificial personal account, and representative personal account items. So this is what is about personal account items. Okay. And now we move on with the next one, that is real account. So coming to real account, we have two types of assets in any of the organization, that is tangible assets and intangible assets. So now let's discuss what is tangible asset. So tangible asset is which we can touch, feel, and we can see them. Okay. For example, what is the plant of the organization, machinery, furniture, stock, cash. We can see all of them, and we can touch them. We can feel them. So all these are tangible assets. And we do also have intangible assets. What are the intangible assets? So coming to intangible assets, we cannot touch them, we cannot feel them, like goodwill, patent, and copyrights, trademarks, etc. So what is this goodwill? What is this patent and copyright? So we cannot see them. We cannot see them. So for example, if we take one branded institution, like for example, Times give coaching for ISET, or Times give coaching for CAT MBA, for MBA, right? So CAT coaching it is going to give. Times is going to give coaching for CAT to get admission in MBA in top universities, right? So here this Times is a brand. Times is a brand to get coaching from Times. Like a student is going to pay some money and he is going to get the coaching, and he is going to be placed or going to get a seat in MBA in a top university in India. Okay. So how much fees he is charging per candidate? Let us take 1 lakh rupees. 1 lakh rupees he is charging for one student. And we also see some type of coaching, Sadhu Coaching Center. Sadhu Coaching Center is providing this kind of coaching, and he is offering for just 20,000. And here it is 1 lakh, here it is 20,000 for the same purpose, to beat or to get rank in CAT and place in MBA. Okay. So the purpose is same, but one person is getting into Sadhu Coaching Center and other person is going into Times. He is charging 1 lakh rupees. Here also the same person, whoever teaches in Times is going to teach in Sadhu, for example. Same person is teaching, but the fees is only 20,000. But here the fees is 1 lakh because it has got some brand. So for that brand, he is charging. That is what is goodwill. It has got some goodwill because he already proved in the market that most of their students from Time is going to be going to get good rank in CAT, and they are going to get good seat in good universities. So it has proved. This Sadhu Coaching Center has come up now recently in 1 or 2 years, and it is a local one, and it is just started its own training sessions recently. So it did not get any goodwill yet. So if after 4 or 5 years, if Sadhu Coaching Center students are going to get good ranks in CAT, so their goodwill increase, and immediately this 20,000 will become 50,000 and 50,000 will become 1 lakh again. So this is all goodwill. This is all goodwill which is creating brand. Because of brand only this goodwill is increasing, right? So we can see that, we cannot see that. We can touch, no. We can feel, no. And coming to patent means it is a unique thing. In some organization, employees found something unique formula in the pharmaceutical and out of their research work that is unique. That is not there in the whole world. During COVID-19, researchers made so much of rigorous work and they came out with so many vaccines, right? So each one have their own patenting. Okay, so that we cannot touch that, we cannot feel that, but we are possessing that. We are filing a patent that work belongs to me. So that is also cannot be written, cannot be felt. Okay, but these are all are assets to the organization. Goodwill is a great asset to the organization. Patent is an asset. Copyright is an asset. Trademark is an asset. All these are assets, but which we cannot see them. So any kind of asset is going to come under the real account items. Either it is intangible asset or tangible asset. We are going to consider all the items of all the assets into real account items. Like generally we see plant, machineries, furniture, stock, cash, all these things, and goodwill, patent, copyright, trademarks also. So real account items means all the assets. And now let's move on with the nominal account items. So what are the nominal account items? So generally nominal account see what are the expenses we have, what are the gains we have, what are the losses we have, and what are the income we have. So all it deals with, nominal account item deals with what is the stationery expenses, what is the telephone bill expenses, what is the electricity bill expenses, what is the water bill expenses, what is the income which we are going to receive out of some commission. So how much of rent we have received, how much of interest we have to pay. All these are nominal account items. Like these are regularly happening in the business. Like for daily conduct of the business, we have certain expenses, right? So for in any of the business, like which are happening regularly on daily basis, expenditure or income will fall under this nominal account items. Okay, so here all kind of expense account, loss account, gain account or income account will come under nominal account. Okay, so here stationery, water bill and electricity bill, rent, salaries. So all these we are paying regularly, right? We are paying regularly. So all these come under nominal account, which are happening regularly. It can be income or it can be expenditure will come under the nominal account. And now we have to be very much careful enough to pass the entry for any of the transaction. So to pass the entry, what we have to remember is basic 3 rules, whatever we have discussed right now. That is personal account, real account and nominal account items, as well as we have to remember the rules of these 3 accounts. So first rule for the personal account is debit the receiver, credit the giver. So first we have discussed about personal account. items, that is natural personal account, artificial personal account, and representative personal account. So whoever may be, first we have to identify whether it is a personal account item or not. If we identifies that it is a personal account item, then we have to apply this rule, debit the receiver. If that person, X person, we have identified in the transaction, once we identify X is one of the person, we have to debit the receiver and we have to credit the giver. This is the rule, mandatory rule which we have to follow in accountancy system. So X, for example, paid cash to X. Paid cash to X. What is the personal account item here? X is a personal account item. It can be artificial, representative, or natural personal account. Okay, X is a personal account. So we have paid cash to X. Always we should feel that we are doing business. We are the business all the time whenever we pass the entries. Okay. So now paid cash to X. So X is a receiver or giver. We have to identify now. We are paying cash to X. So X is receiving that cash. X is receiving that cash. So X is a receiver. So we have to debit this X. And now, just like that, coming to the second rule, that is real account. Real account is debit what comes in, credit what goes out. So debit what comes in, credit what goes out. Here I'll write purchased furniture for cash. So purchased furniture for cash. So as we discussed, we are going to be there with the only double entry system. We are not going to deal with single entry system anymore. So for every transaction, we have to identify two effects, that is debit and credit. Here you might be wondering why I have wrote only debit and did not write credit. So I'll just explain what is credit also. Here paid cash. Paid cash. Cash is an asset for the organization. It comes under a real account. It comes under real account. First, we have to identify the important items in the transaction, that is X and cash. So X we already identified, that is a personal account item. So we applied the rule and we got it is debit. And coming to cash, cash is a real account item, and coming to real account item, cash, debit what comes in, credit what goes out. Here paid cash. That means we have paid cash. Cash has gone. Cash is going out. So we have to credit that. So we got both debit and credit here. And coming to this transaction, purchase furniture for cash. Here furniture and cash both are real account items. So purchased furniture. Here according to the rule of real account, debit what comes in. What is coming in has to be debited. What is going out has to be credited. So furniture is coming in. Furniture is coming in, cash is going out. When we purchase furniture, furniture will come in and cash will go out, right? So, debit, furniture, credit, cash. So, we got the two effects here also in the transaction. And coming to the last one, that is nominal account. Nominal account means debit all expenses and losses, credit all incomes and gains. This is the third rule. So here I'll write another transaction here. For example, paid salaries with cash, rupees 10,000. This is another transaction. Okay. So salaries is a recurring expenses and cash is another important item here. Salaries comes under nominal account. So I'll just write it as N, that represents nominal account. Cash is a real account item, that is R. Okay. So now coming to salaries account, it is an expenditure for our business. So debit all expenses. Debit all expenses. So we have to debit this. Coming to cash. Cash is a real account item. Cash is a real account item. So out of our business, when we pay salaries, cash is going out. Cash is going out. So we have to credit. We have to credit cash. So like this, we have to identify what are the important items in each and every transaction and highlight their nature of account, whether it is personal account, real account, and nominal account. And based on these three rules of accounts, we are going to differentiate what is debit and what is credit. This is how we have to differentiate debit and credit. This is all about the double entry system. So in the next session, let us move on with the passing, how to pass this debit and credit as a form of entry in the books of accounts, that is journal, which is the first book of accountancy. Okay. So thank you for today. Thank you very much.
Like, share and subscribe. Hit the bell icon for more updates.